I recently saw an article on 7 Sharp where they spoke about the interest rates coming down and how you could be saving potentially $138 a week. Now, I wanted to challenge that and let me show you. Right, I've got the sorted calculator up here on the screen and I have put in the exact same figures as they were talking about on 7 Sharp, which is $500,000 loan, the interest rate, which was 6.85% 12 months ago, and the loan term is 30 years. And exactly like what 7 Sharp worked out, your loan repayments on a weekly basis are $756. This is where I really want to show you. Look at this. This is the interest that you will pay over a 30-year loan based on 6.85% interest. $678,685. Let's change these figures to what 7 Sharp was showing. And they were saying that you could now get a fixed rate loan at 4.99%. In their example, they were saying your repayments would be $618 a week. Let's not split hairs. But basically, between the two loan payment amounts, you were going to be saving an extra $138 a week. However, this is still keeping the loan over a 30-year term, or in their example, it was probably 29 years. And if the interest rate stayed at 4.99%, you'll pay $464,514 in interest. Still a heck of a lot of interest. Over the right-hand side here, you can see that that's the total amount that you would be paying. So not only is it the principal that you've borrowed, being the $500,000, but also the interest. Now, I'm going to challenge this. Let's leave it at 4.99%. Let's go and change these loan repayments back to what they were initially saying, which was $756 a week. As you can see, you would get mortgage-free 117 months sooner, which is fantastic. So it would bring your loan term from 30 years down to 21. The other thing that we need to look at is look at the amount of interest that you would be paying on $500,000. No, it's no longer a 30-year term, but you would only be paying $293,667. Now that is a whopping $385,018. So I'm going to pose that question. Are you really saving money by taking that extra $138 a week now and using it on consumables? Or are you better off leaving your repayments the same, so keeping it that extra $138 off your loan repayments and actually saving yourself $385,000 worth of interest? Food for thought, isn't it?